So about 3 years ago, I was offered a job teaching at UWF. I was so excited to run to my mother, 93-year-old then, and say, Mom, I got a job at Pensacola. So my mom said, well, so you're not good enough of Coca-Cola, huh? That wasn't the purpose. But it took me a while to get to know everybody. And but I'm here today to just give you, I was told to give you a introduction or the investment product and the savings accounts you can have. But I don't think that you want to hear that from me for this short period of time. And so this is a difficult time like any other time, that I'd rather spend some time with you, talk about your mindset, what you should do, okay, in the long run. I'm not going to tell you what stock to buy, what CD to get in. If you want to get a CD, you go to the bank right here, okay. And but I want to think about, and I look around, most of you are at the age that I really don't want to see for a reason. You're going to see this, okay. Now, I'm going to make this very informal, and typically I like to ask questions. I think you can get more out of it. Oh, John was my student, and so let me see who else is the victim here. So John was my student. What, about a year ago? Okay. So he also worked for university, and he in a party. I have many students like that. I have about 300-400 students for the last 20 years of similar kind. Teach them how to invest real money. And so one day that John come to me in a big reception, a party, that usually we have a lot of reunion opportunities, and that my old alum will come back and visit me. And usually I assume this is under the influence. And John will come over and say, Dr. Ma, you're my favorite professor. And then he said that if I only have 1 hour to live, I want to spend that hour in your classroom. Then he said that because an hour in your classroom feels like eternity. Okay. So I want you to spend at least half of your eternity with me for the next 30 minutes. And I will open, of course I open questions. And most of the time I will not know the answer, and John will answer for me, okay? So these are the proper mindset you should have, okay? Ironically, couldn't be more easy. You say, I know that. Yesterday I was planning for this speech. I was doing some graphs because I figure you guys, just like my student, have no attention span about what I'm saying, but you like to read pictures. So I was trying to do some graphs and videos, which you're going to see some. And so the first idea I was thinking about is, I'm a professional money manager myself, and then I teach students manage real money. So, I'm sorry. We'll have to talk later. Yes, thank you. But we spent a whole life doing this, and the student has tremendous record. And then I sit down to think about it and say, oh my God, the only reason we can come up with why they can do so well, other than they had the best teacher ever, but because we all boil down very basic concept. For example, something called start earlier. Okay, I used to be at the private school. I told you before that you have to start 1 year early. You make just 1 more year of money. I mean, that's so trivial, right? And you don't even think this is. You know that, but you don't realize how powerful that 1 year, extra 1 year. Okay, I used to be at the private school, and so most of my job is trying to get expensive students in. So I stand outside my training lab and kind of see all the high school kids coming through 3 times a day. Okay, so I see, 300 people easily a week, and so easily, and I talk to them. And my favorite opportunity or comment is when the high school students come to me and say, Dr. Ma, when I start getting interested? I say, what? And he say that when I was 10 years old, my birthday, my grandfather gave me an apple. That's a big deal. I'm an iPhone, right? Everybody gonna get an iPhone. He said, no. He gave me a share of Apple stock. So when he was 10 years old, since then, he started to invest. So I'm teaching 21-year-old kids. I'm going to give you some ideas. I'm teaching 21-year-old kids. So these kids start before everybody just 10 years early. That's my favorite news I can hear. Okay? The worst news I can hear is some of you, hope you guys are old enough, a lot of my colleagues who retired, okay? I'm going to retire before you, Rick, okay? So I don't ever want you to show up at my door. All my retired faculty will come down, 65-year-old, 66-year-old, come on, retire. Hey, Casey, hey, I'm retired now. I got all the time to make money. Show me how to make money. Okay? Okay, so how many years he missed? 65 years, right? Pretty much. Do you realize that the world doesn't walk around your own timetable, right? The financial market, stock market, not just start paying off just because Dean Fountain just retired. We need to reward him, the stock he picked, gonna shoot up, right? Crazy. There's nothing really personal, literally nothing personal with you, what you invest. So now the difference is just if any particular person is irrelevant in terms of making money, just how much time you have. It's easy, right? It's not even easy math. You figure, okay, if I get 1 more year, start 1 year early, I will get 1 year more money, right? 1%. Like if you make 10%, yeah, I'll get 10% more. You have this linear process, okay? Now, which is not true, okay? Let me tell you the beautiful story of compounding and early. Let me show you a couple of graphs. These are things even surprise me, okay? For example, this tells you if you start investing, okay, 10 years early, 20 years early, 30 years early, 40 years early, huh? How much more you will start with. For example, let's say you start the right time. You start at the beginning of you start whenever you want to. You got $1, okay? But if you have started 10 years early, you would have what? $3. That means the last 10 years you make 200% of your return. This is 10% a year, okay? So if you start 10 years early, you're going to have 200% more money. Okay? If you start 20 years early, you're going to have 600% more for the same dollar. My point, it didn't mean you put in more money. Just the fact that you put in, earlier, like the kid I'm talking about, right? He started 10 years early. Actually, he started 10 years early. When he was 10 years old, none of my 21-year-old kids actually investing. So I was simplifying the case. Most of the people start investing, they are what? 30 years, if not 40 years old, right? Okay, so he's ahead of other people for 20 years minimum, which means when you get to invest, you bring in $1, he say, I got $7 because I did that 20 years ago. You can see how powerful, for the same dollar, just you start early, just purely you start early. I cannot emphasize that enough because this is not linear, okay? Which means we think that, like, okay, you start early, so you get extra 10%, fine. No, it's not. It's not like that, okay? So the story here is simply just starting. I mean, I told my college kid the same way. I said, guys, when you start working, even not 21-year-old, when you start working, you can put money away, IRA money, right? And I said, well, usually show them, a very easy example. So you and your roommate just graduate, 21-year-old, and you are a very disciplined young lady. You start putting in what is allowed now, tax deductible, let's say $6,000 a year, huh? And you put it in the first 9 years. So by the time you're 30-year-old, you stop, okay? And so you put in the first 9 payments, huh? $6,000 a piece, and they're tax deductible. Your roommate want to enjoy her life, and the first few years, so she just used all the money. Then by the year she's 30-year-old, she said, oh, maybe I should be more mature like you were, so maybe I should start putting money. So you stop after 9 payments. She pick up, huh? She pick up on 30 to 65, so that's what, 35 payments, right? Huh? So you do the first 9, she did the second 35. That makes sense? That's your entire. At the year of 65, who has more money in the account? What do you think? If this is the way I asked, you know the answer, right? Yeah. The first 9 will easily more than the next 35. It's nothing to do how many payments you put in. It's how, finish my sentence, how early, okay? Time means everything. And it's not linear. We don't live in the linear world. If you think about this, if you think any part of your life, there are very little things are linear, which means only 2 points, the distance between 2 points. Everything in your life is like this, huh? Like this, okay? So this is the first message. I want you to start early, and this is so powerful. So let me show you what's the other graph. Okay, the second argument is compounding, huh? How powerful the compounding is. Compounding means, in my class, I usually, to let them remember, is compounding means almost like you leave the money in the account, you make 10% a year, your CD, and most of the time you buy stocks. When you make money, they pay you dividend. The money, the little money, like a baby, huh? They should stay in. And then they will be reinvested at the same time, okay? So what I call baby making babies, huh? And you will not believe how much babies can make babies. I mean, this access, this is called compounding, okay? This is an example to show you. I should have asked that as a final exam question. Usually I love to ask people, say, okay, don't look at the number. I say, to be honest, let's say if you think that if you put $1 in, make 10% a year, okay? Remember I say about 40 years retirement, huh? 40-year retirement, you wait 40 years, and the 10% you only give you $5 in the end. The first $1 after 40 years become $5. That's a lot, 500%, right? That's a lot. But if you leave the money, you make sure they keep reinvesting it, the babies keep making more money on the babies, you'll end up with $45. This is 9 times. That's unthinkable. I couldn't even come up. Yesterday I was doing this. I said, oh, I must have done something wrong on my Excel spreadsheet. No, my graph is wrong. Okay. Okay. So what I'm trying to impress on you is this: is we think the blue line, that's called linear line, huh? Blue line. We think like that, but we're living in a reality of that red line, huh? Okay. By the time you're recognizing that, you're going to live on that line, or you choose to live on that blue line, okay? The world is on this line. So you need to remember that. Nowadays, the good news is that financial institution will force you to do that. They usually say, okay, now, whenever you make money, do you want to take the extra money out to spend it, or you want to keep reinvesting it? Usually it's the default choice, huh? So that's the second thing is you have to leave the money in. That keep rolling over, huh? Keep rolling over. So you make 10% the first year, that 10% can stay in the next year, another 10%. You get 20% total? No, you're going to get a little bit more, actually 21%. Why? Where's the extra 1%? Because the first 10% going to make what? Another 10%. You see that? So you have to leave it in. That's called compounding. Look at that. 45, 5. If you just take out every possible money out, you only get $1 $5 over $1. You can get $45. Just leave everything in. You see, the difference is just unbelievable, right? This is simply break most people's mind. Okay, I'm a professional money manager. I still can't get over with these things. Just because our brain, our mind is wired linearly, okay? They're wired just simply linear. But the world doesn't act that way. So that's the second point I want to make is compounding. I'll try to remember what's my third thing. Okay, the third thing is a lot of banks don't want to hear, I'm sorry, is nowadays with technology, you should better manage your own money. Okay, which means Robinhood, you know Robinhood, the good part, okay? The online trading have zero commission or Charles Schwab or Ameritrade. These are the best thing ever for people like you and me. Okay, now I'm not going to ask a particular question to you guys, but you understand your investments, usually you hire a financial advisor. Your retirement account usually managed by money manager, professional money managers. Do you think it's free? How much do you have to pay? 1 to 2% every year. 1 to 2% every year, minimum, right? Some ruthless one will charge you fees and everything turn out to be 3 to 4%, right? Okay. And what do they do for you? They put your money where? Mutual fund, which is index fund, huh? Okay. And what do you think they did? You put the money in, and what they do is they go on, they get their intern, huh? Go to intern. So just click the box on that. I'll go to computer. You click that S&P index fund. Click on that. Okay, put that money. Okay. And they turn around, charge you 1 or 2%, huh? A year. So that's why there's something called, there are two things, okay? One is even you have no skill, no interest, or no orientation, or no time, no energy to do your own investing, even to do that clicking, you give a robot car, robot, what they call a robot called robo-advisor, huh? They're this robo-advisor. Most of the large institutions have that. They charge you a flat fee. Charles Schwab, you know Charles Schwab, right? One of the largest robo-advisors. You know how much they charge you? Whatever the money you have. 1 year, one time. $50. $50. Okay? $50. One time, 1 year. Do exactly the same thing.
Robo-advisor.
Yes. Because that's what they do. They just, okay. Now, $50 was probably 5 years ago. And so even, you see, you are not active investors. You are not traders. You're not money managers. Or you put the money away, don't think about it. You have no skill. So why do you have to pay someone 1 to 2%? Huh? So they can get a computer to do it, right? And you can just hire a company. Just is a computer called robo-advisor. Okay, this has been there all the time, and they were able to get. I think it was 5 years ago. We were both interviewed by CNBC or something, and they just want to, because this robo-advisor just really piss off every impossible financial advisor industry, because they take their 2% away. Right? So they really keep low profile. So I think that less than a year they raised like $50 billion. People, you and me will put it in. I mean, it's a no-brainer, is it? Right? It's a no-brainer, right? $50 a year. I'm not sure the price now, but that was some time ago. $50. I think it was a flat fee for everybody. Okay, so that's a tremendous. Now that's the easiest thing to do. Okay. Now, on the other hand, guys, even you're not retiring, I think there's almost no excuse now. The way the computer, how easy to use computer. I'm not asking you to do day trader. I'm talking about day trading pretty soon. But I'm not asking day trader. I just want to manage your money at the cheapest cost. It has no real impact, actually. Okay. For example, you can ask your son, or some of you maybe grandson, to show you how to use computer, how to go on internet, right? And you can just open a Charles Schwab account, the Ameritrade account. They probably not going to charge you any commission. It's called IRA account. Okay, you can open an IRA account. It's just you click like open IRA account, and you wire the money in. Then you can buy, sell things. So instead of someone else charge you 2% to buy that $100,000 worth index fund, mutual fund, you click it yourself. Huh? How difficult is that? If you only invest in index fund, which most likely is the case, okay? We're going to talk about that later too. So nowadays, majority of the mutual fund, the financial advisors make you invest in, they don't pick stock for you. They pick index fund for you. There's a mandate how much you should be index fund, okay, that kind of thing. So you're paying too much, my point is. And you say, oh, I don't know how to use computer. Get your grandson over, sit next to you, show you how to open it. And do it once, you'll do it. Okay? And do the simple math, okay? Now, why do I say Robinhood is good? Because it used to be that if you want to trade, it's an arm and leg thing, okay? None of you are old enough. Some of you, maybe my age group, will remember when I used to trade stocks, you buy 100 shares, it's $10 ticket charge. They first charge you $10 plus like 5 cents a share. Ridiculous, okay? Now it's what? Free. Robinhood is free. So this is the first time, well, last couple of years, we start have a lot of these institutions. They just don't charge you anything. So you get on computer, open the account with them, and do your index fund, do your stock. You want to buy Tesla, that's our favorite stock. Okay, you buy 100 shares, take you 3 seconds to do it. Okay? And you pay no fee. You don't pay any commission. Huh? I couldn't figure out what better deal you can have than that, okay? Instead of paying someone 2%. So Robinhood is good because they make it easy for you now. It's available to everybody at no cost basis. You don't care how they make their money, as long as they don't charge you, right? Okay? People say, oh, they're stealing behind the... Yeah, you don't know what you're talking about. Those people don't know what they're talking about. I mean, there's no free lunch, okay? You give up something which doesn't affect you that much, then whatever they charge you, that 2% or whatever. Okay, good. So that's, and my point is nowadays, even we're older people, we have no excuse not to use computers. You guys for sure, the younger people, definitely have no excuse, okay, not to do your own money. First point, start early, right? So if you are 18, you're 20, look like that, okay? John, you behave like 10, even you look like 25, but, I'm sorry, yes. So the earlier the better, and the younger the people has the most of the technology anyway. Let me talk about something most people will talk about, day trades, okay? And I couldn't put in more worse adjective there, okay? Day trades, okay. Let me give you some of the real experience. Every single day, I mean, especially when the market is going up like crazy. The day trade jobs are for people either don't want to get a real job or people who lose their real jobs, okay? And the only reason day trade, did you ever hear your friend day trader say, they come to you and say, hey, I lost a lot of money today. Did you ever hear that? You have people come in, your boyfriend, I hope not. But anybody come in? No, I never heard that example. Always hear people come in and say, hey, I make so much money today. Okay? That's a standard. I used to go, I came from D-Land, nearby Daytona Beach. So this is a little town, have this community diner, which this is the one big thing I complain here. The only community diner here called Waffle House here, right? But there, you walk in, everybody knows your name. You have the fixed table. Before you sit down, they already have your food right there. And all the people there, we have a first table is a round big table. Every diner is, we call retired table, okay? Retired table. People has to be retired. Or later on, we turn out to be, no, not a medical term. We all turn out to be a retard table, okay? Just because we all just talk stupid things. But anyway, and these people, and usually people, 2008, 2009, you see a lot of people there, young people, they're all contracted. They lost their job because of housing crisis. Huh? And every one of them will say, hey, doc, they call me doc, professor. Okay. They say, doc, show me how to do day trade. Show me how to do day trade. I want to make do money. Okay, because now they have the time. I don't know where they have money, but and I always say no, don't do it, don't do it. By the way, so you know, for the last 20 years I was there. Every single time people come to ask me, say, how do I do it? Should I do day trade? Should I trade? Show me how to do day trade. I always say no, no, no. How many people listen to me? Percentage guess. None. Okay? You know how many people actually come and say, Doc, I lost so much money yesterday? None. How many people will come to tell me, say, Dr. Ma, I hit a jackpot yesterday? 100% of them. They all will come to tell me. Oh, they denial. They, you know, this is a selective memory, denial, all these things. Okay. But anyway, so, and then, the easiest test is whether they have denial is, you realize when the housing market bubble burst about 2 years, 2008, 2009, 2010, okay, guess what? All these people on my round table, young people, they all go back to work. They start building houses again. Now, if your day trading is so good, why would you do that for the rest of your life? Why would you not retire already, right? So I never see anybody, you know, day trade, you stay in front of the computer. You need a microsecond time attention to make that penny on the sidewalk, okay? Do you know, you cannot even know how not competitive you are. What's the opposite? Non-competitive? Huh? Not competitive you are, okay? Do you know when you log in your any of your trading software? Did I say Charles Schwab, Ameritrade? Remember that little, you open up, say, I want to buy and sell, okay? This is exactly what happened. You open it, you say, I want to buy IBM 1,000 shares, okay? So what you do is you open your software, Charles Schwab software, Ameritrade software, or even Robinhood software, especially Robinhood software. You open up, there are boxes you fill in, right? The first box is what ticker symbol is. Oh, IBM, right? Then the second one is buy, sell, right? The third one, how many shares? Okay? So the second thing you do, you go to click on what? Buy or sell, right? The second you click on buy, that information is transmitted to instantaneous to what? Large institutions. Guess what they do? They buy in front of you. That's called front running. They know you're going to buy. They just buy. Literally, the computer will calculate right away, take them 1/100th of a second to put in a trade right in front of you, buy in front of you. Then when you buy, you have to buy from them at a higher price. They make that 1/10 a penny. If they do that continuously, do you realize? I didn't realize until someday I was writing an article, someone told me, you know, when you click on that, just say buy. They don't care. The ticker there, so all the information you click on, that's why they put the buy on top, buy or sell on top. Okay? So that's how Robinhood make money. Huh? What they say is they sell order flow. Okay? So they sell this information instantaneously to the large institution. They can fund running. Okay? So how do you compete with that? If you're a day trader, right? How do you compete with that? You cannot compete with that, right? You don't have. So, you know, would you believe that the internet is so fast now? They are fighting between large institutions to do day trading or do this front running. They, in the matter of 1 out of 100 of a second. To the point is, they have to pass a law on trading floor that they disallow the trading firm put the computer terminal on the floor versus a block away where the company is. You see that? There's a difference. If your trading floor, when you hit the terminal, that travel distance from a block away to the trading software versus you literally here, you push it down. You see that? That's the difference. So all the large trading companies will put their literally computer on the trading floor per se, to the point some senator come in and say, nobody can do this anymore, okay? They pass a rule saying nobody can put your own trading software. I'm trying to tell you how much time they can make money off you. And average people, you and me, have no skill, no capacity, no technology to combat that. So you can never be a day trader other than you have mental problem. We all have mental problem, right? We have selective memory. But only we make money, we never lose money. Okay, so day trader is a bad thing, okay? If it's a good thing, then you see there's a whole army of day trader generation consistently there. All you see is then what? Come and go, come and go, come and go, okay? Now, how about option traders? Option traders, well known is only that the same 5% smart people like him. It's like the casino house, huh? They just lay back to see all the sucker coming through, like that, okay? Now, this is crypto. Now, I changed his mind over the year, okay. Now, cryptocurrency, crypto investment, this look like it's getting bigger and bigger, of course, and everybody says, should I have it? Let me tell you my feeling afterward. But I want to respect my students. They have done a tremendous research on this every few years, okay? I'm going to show you a little video clip. It's their presentation. At the end of the class, my course, they have to make a presentation to the community of their stock and bonds. So one of them is always crypto. So I'm going to show you.
Get right to it. The first question is, what is Bitcoin?
Thank you, Jocelyn, for this opportunity. I'd like to thank my opponent, Mike, and the University of West Florida for hosting this event. There are plenty of points I'd like to make tonight. First of which, what is Bitcoin? Bitcoin is a virtual currency and worldwide payment system. It meets the three functions of money. It's a medium of exchange, a storage of value, and a unit of measure. Bitcoin is not a physical coin. It's 100% digital. Unlike paper currency you get from a bank or government, Bitcoin is mined. This means each time a Bitcoin is created, it's harder for the next one to be created. This fights against the risk of inflation. However, I am not here just promoting Bitcoin. I believe the technology behind it, blockchain, is more valuable than any tech currently being researched. Blockchain is a virtual record book and links blocks of data together. It's more secure than any cybersecurity software device on the market. Picture a piece of paper. Blockchain tears this piece of paper into millions of pieces and sends it all across the internet. And only with the perfect key can these pieces of paper be put back together. This key is what makes blockchain files unhackable but still viewable anywhere with internet connection. The value of Bitcoin is tied to blockchain.
Mr. Branch, your response.
Jocelyn, thanks for letting me be here tonight, and I'll try to answer your question a little bit more succinctly than Mr. Austin here. To start, I want to dispute the fact that Bitcoin is actually a currency, because to be a currency, it has to fulfill three roles, and currently, Bitcoin fails at all three. First of which, it needs to serve as a medium of exchange. Less than 1/3 of businesses accept it as a form of payment. Secondly, it has to serve or has to hold a store of value, but its volatility is unprecedented and its repetitive history of dropping by more than 20% means it cannot serve as a medium of transaction. And thirdly, since you mentioned that there's no central authority behind it, proves my point even more, that it is not a legitimate currency. Because to be a legitimate currency, it has to be asset-backed. And Bitcoin is actually negatively asset-backed. And Bitcoin uses real resources like electricity just to create something that's a figment of your imagination. And regarding to the elephant in the room, it points to a serious underlying problem with Bitcoin. The fact that there is a fixed amount in existence. Because once it's all mined, the demand for Bitcoin will flatten out and the price of it will go down. This isn't sustainable. Bitcoin's a lot of things. A fad, a craze, but it is not a currency. And all this talk of blockchain and everything, yeah, it sounds nice, but here's what it boils down to. It's new technology, it can be exploited and taken advantage of just like anything else. Recently, NiceHash, a cryptocurrency wallet program, had $63 million stolen overnight due to a major security breach. Why? Because the keys aren't secure. And at the end of the day, Bitcoin is not a currency and blockchain is nothing new.
Thank you, Mr. Branch. On to the second question. Is Bitcoin a good investment?
Now, before I answer that, I gotta respond to Mike's ridiculous statement. He just mentioned digital wallets getting hacked, but failed to mention that those wallets did not have blockchain tech. Mike, would you define a good investment as something that can earn positive returns year after year?
Sure.
Then how is Bitcoin not a good investment?
What?
In 2015, Bitcoin had 35% return. In 2016, 120%. In 2017, over 1,000% return. In 2018 was the one and only negative year, but it bounced back up a 92% return in 2019. Ask again, how is Bitcoin not a good investment? Now for the cherry on top, let's talk about blockchain. Blockchain is a huge reason why you should invest in Bitcoin and where major companies are investing. Companies like JP Morgan, Goldman Sachs, Microsoft, Facebook, Amazon, Google, Apple, and so many others have spent billions of dollars on blockchain projects and research. Mike, do you think that you have better investment during Warren Buffett, one of the greatest investors of all time, have publicly voiced his support for blockchain? Mike, do you believe that you have better investment judgment than Warren Buffett?
Mr. Branch, your response.
Let me ask you a question, Nick. Do you actually believe that Bitcoin's a good investment?
Absolutely.
I won't insult your intelligence by asking if you actually believe that. But here's what it comes down to. You can't deflect the attention away from Bitcoin and onto blockchain. You keep saying the fundamentals of Bitcoin are in blockchain, but that simply isn't true. Because if it was, the price of it would remain stable because blockchain isn't changing. Instead, Bitcoin prices are incredibly volatile. Why? Because the value is not driven by new technology. The value is driven by speculative demand. And I must admit, I admire this selective memory because in 2011, Bitcoin shed 94% of its value in just 1 month. After that, in 2013, it lost 32% in 1 day. January 2018, it lost 62% in 1 month. And just recently, in 2019, Bitcoin dropped 30%.
True investors have a long-term approach and shouldn't worry about the day-to-day price.
People don't invest on an annualized basis, Nick.
Mike,
you should know.
do not understand
Mr.
blockchain.
Austin,
Well, you're
please allow him
contradicting
to
yourself.
finish.
As I was saying before I was rudely interrupted, is that at the end of the day, blockchain isn't revolutionary and it's going to struggle to gain global acceptance. Right now, we're witnessing companies just throw blockchain into their name and watch the valuation of their companies skyrocket. Companies such as Global Blockchain Corp, Riot Blockchain, Blockchain Mining Ltd., all of these are fundamentally worthless companies that haven't changed anything, throw blockchain into their name, and watch the valuation of their stocks skyrocket. It's speculative demand. And along with that, like I mentioned, it's going to struggle to gain global acceptance. I mean, after all, countries such as China, India, Egypt, Vietnam, these are just a couple of examples that have already banned cryptocurrency. So at the end of the day, here's what it comes down to. Volatile returns and a lack of global acceptance. Doesn't seem like a good investment to me.
Thank you both. Now on to the third question. How does one invest in Bitcoin?
Now, before I answer that, Mike, you claim that Bitcoin isn't a good investment, yet JP Morgan and Bank of America listed the number one threat to potential revenue.
JP's
being
against Bitcoin,
and
not blockchain.
cryptocurrencies.
Those are two different things.
JP Morgan is against Bitcoin because they know it has the ability to put them out of business. Now, to answer Jocelyn's question, we should invest in Bitcoin. Luckily, there are plenty of ways you can do this. The first way, you can invest directly in Bitcoins. Another way is to invest in blockchain ETFs like Coin and Ledger. A third way, you can also invest indirectly in companies that produce the tools needed to mine. Companies like Square, AMD, and NVIDIA. These stocks have their own risks, but also have a looser relationship with the Bitcoin price movement themselves.
Where do I start? There is a reason why Facebook and Google have already banned any type of advertisement for ICOs. Because they are a hotbed for fraudulent and criminal activities. There's companies such as ICOs such as BitConnect, Recoin, Confido. These are just a couple of the scams that have stolen real people's money and have lured people in with this idea of an amazing return on cryptocurrency. And speaking of the jokes, these coins are jokes such as Garlic Coin, Dogecoin, Mooncoin, Trump Coin. Do these really sound like solid assets you want to hold? And the next thing up is the wallets, which we already talked about. They're susceptible to hacking, as we know. But on top of that, the Wall Street Journal just recently reported this past year in 2019, $4.3 billion were stolen due to Bitcoin fraud. Doesn't sound like a good investment to me. And lastly, the mining, which we already talked about, but besides being unsustainable, they've caused a lot of legal issues. For instance, towns in New York have already started banning cryptocurrency because it uses up all the electricity and drives prices up. So whether you're getting your Bitcoin through ICOs, wallet programs, or even mining it yourself, the fundamentals of it haven't changed, and it is not a solid investment.
Thank you both for your well thought out responses. I now ask you to give a 1-minute closing statement starting with Mr. Austin.
2015, 2016, 2017, 2019, 2020. In 2015, Bitcoin had over 35% return. In 2016, Bitcoin had over 120% return. In 2017, Bitcoin had over 1,000% return. In 2019, Bitcoin had over 92% return. And just the past 2 months alone, Bitcoin had an over 34% return.
Mr. Branch, your closing statement.
1637, 1840, 2000, 2009, 2013, 2019. In 1637, the price of tulips dropped 55%. 1840, the railroad industry drops 40%. 2000, the internet era ends with a 25% correction. 2009, the financial industry tanks 10%. 2013, the first Bitcoin bubble pops with a 49% drop. And in 2019, Bitcoin prices drop 50%. Thank you.
That's 2 years ago, okay? World changed a lot. Can someone impress me, tell me what this graph we're looking at? Want to guess? This is the days, 0 on the bottom, 0 days, 10 days, 100 days, 50 days away from the peak point. And each peak point are listed on top. Can someone guess what this graph telling me? Yes. Exactly. This is all the previous cycles. We can learn a lot by looking at that picture. We can truly learn a lot, okay? Now, instead of telling, if you, my students are going to ask you so many questions, okay, you can read so much. But the one couple interesting observation is this. They all follow the same cycles, okay? They all follow the same cycles. But more interesting is the red line on the top. That red line is the most recent line. My point is this. A few years later, it's inevitable the cryptocurrency is going to become mainstream. It will be mainstream. And so what I'm trying to say is this. If I have a long-term retirement portfolio, if I want to put money for my kid trust fund, if I want anything over 10, 20, 30 years long, you better have a presence in cryptocurrency because that is the inevitable future. But if you're retiring a year, 2 years from now, you probably don't have the appetite to handle this kind of volatility. You see that? Okay. The good news is, the bad news is, of course, you have this kind of volatility. The good news nowadays is what? That they bounce back real fast now. Okay. They bounce back real fast. And also, you can see the most recent one, the red line, actually the highest ever. That means now they move with the U.S. stock market now. That become mainstream. But we still have this nasty word called politics, international politics. Is whose crypto we're going to use, right? So let's first survive this war first, right. And let's talk about the crypto. But my point is this. I mean, this is going to be crypto. There's no question. Okay. Now, in the short term, we're going to have a lot of volatility for whatever the reason we just talked about. Okay. And if we don't have long term, some of us don't have as long term as we want, but all your young people and your kids will have the future. So there's no excuse you don't put that in your portfolio. And there are many places you can invest. Okay. And then the reason why do I want to put it in your retirement portfolio? So you don't have to look at it for the next 60 years. That's one more thing I forgot to tell you is that just don't look at it. That's the whole idea of retirement portfolio, okay? Although this last thing is actually the most important thing. And I meant that not just for investment, about your life, okay? Most of you are now old enough to realize, I still remember that when I was in 20s, when I get my first job, I was so excited. I sold my house right away. I had a house then, I guess. Sold my house right away, moved there, and didn't think anything else. 3 years later, I want to quit. I want to leave. And then my boss want to sue me for this 3 years. My dean is a lawyer, former lawyer, so he knows exactly what I'm talking about. No compete, all these things. And then A lot of you have marriages, and one out of a half, well, 1 out of 2 out of 3, or 1 out of one every 2 gonna go through this separation agreement. How many of you will actually work that out beforehand when you marry your spouse? Huh? So my point is, so I always advise young people, say, when you get a new job, look at the offer, okay? And when you get older and older, your contract gets longer and longer. Okay, the first page is your offer. The other 90% of the pages are how you can leave, in what capacity you can leave, exit. Okay, and I have many other jokes which I probably cannot say that out loud. But in terms of exit strategy, in terms of relationship, but anyway, it's more important than exit than entry any days. Anybody can buy stock. I'll give you an example. What do you think the average U.S. stock market year makes? You should know. About 10%. Let's in between. It's called 10% in the last 60 years. Okay? 10%. Index fund make 10% a year. Let's compromise. What do you think the average U.S. investor in stock market make a year in real terms? 3%. Well, not that bad, but you're on the right direction. About 6-7%. Didn't I say index fund is no-brainer? You buy, you sit on it, you don't look at it, right? But why average investor, they still buy index fund, right? They only get 7% out of 10. Tell me why. Huh? Huh? No, I meant the average stock market make 10% a year. So you can buy the stock market and sit on it. That's the key word, huh? You get 10% a year. But in real world, average investor only gets 7%. Because what? No. They have a terrible exit strategy. They have no problem to get in January 1st, but they get out of fear, out of whatever, right? Greed, fear, huh? It's the exit decision make them cost them 3% out of 10. Otherwise, if you don't get exit, you just stay in there, you're going to get 10%. Like, that's a no-brainer. How difficult is that? The difficult part is when to get out, huh? Okay, so this is more important than anything else, okay? So you need to see when you hire a money manager, you're not going to hire a man manager. You see, I'm not going to hire any of these young people as my financial advisor. Anybody less than 30-year-old. Why? Why do you think I say that? Because 30-year-old advisor or even 40-year-old, they never witnessed or lived through a what? Real downturn. I want to see people actually the market crash. I want to see how the money manager come out of it, how they get exit. Huh? Any bozo can buy with the market. Okay. Do you know all the day traders? They all make money exactly the same proportion as the stock market, especially going up. I got so many stories for that. I'm going to leave you now. On the other hand, let me tell you a true story. Okay. Talk about day trading. I'm a professor at DLand. I also know just the smartest people in town, which is brain surgeon, huh? The best brain surgeon in town, number one. So the worst client I have always are doctors, lawyers, engineers, the scientists, the smartest people. They are the worst client because they always think they can apply their intelligence to humanity, to life, to everything else. So this best doctor ever, he's Asian too, so that's even worse. Huh? So we talk a lot, and so I always say, he always think, he should, day trading is nothing. I mean, it's just no-brainer, huh? That's a good point. He's a brain surgeon. He's no-brainer, right? But anyway, sometimes I surprise myself. Huh? But anyway, so one day he told me, he said, Casey, my wife's going to be out of town for about a week. I can take a week off. So why don't you just teach me how to do day trading, make money in a week? Okay? How do you teach me now? It won't hurt me to learn in a week. Teach me a week. I got a week time. So teach me a week how to trade these things. Options, actually, online. How to do this so I can make some money. I don't mind making some money. I said, good idea. Okay? How about, let's be fair, how about that in that same week, I teach you how to trade. You teach me how to open your brain to do a brain surgery. And then let's call it even. We don't charge each other. He hasn't talked to me since then. Okay. My name is K.C. Ma. Thank you very much. You coming here, spend what, your lifetime with me today?